On today's video we continue with our journey, but before then I expect you should have watched the first lesson and the second lesson we treated. The first lesson where I gave you guys the background of what trading is, different assets traded, and just um, context about the whole thing called trading. And secondly, I took us through a journey of opening our first account. Make sure you follow that step and make sure you open a demo account. Get familiar with the MT5 interface because that's what we're going to be using to execute our trade. So at the end of each lesson, I try to give us an actionable step to take so as to get practice, because each lesson is built on another. So if you skip any, you might have issues. So that being said, today we're gonna be looking at what candlesticks are, their history, who and who were behind it, how they came about, and how we can use them and why they are important to us. With that being said, I head on. So first off, history of candlestick. Um, First off, what is candlestick? Before we start talking about it, you see these things you are seeing here on the chart, this green and red, you could change their colors, but this is just the color preference I change. Everything you see here could be customized color wise based on what suits you, but then green represents the bullish candle like I told us, red represents the bearish candles. So these are candlesticks. But then you would see that like it's just a representation. These are data of what's happening like live in the market. So from since we are not privileged to be on the trading floor, this technology, the whole interface about the charts has, in our generations, we today we have it easier than those before us, because back in the day, before you were able to place a trade, you have to go to a trading floor, you have to book a trade. You don't even, before they traded based on fundamentals and price quotes. What are price quotes? Purely they trade off based off these numbers, right? These numbers we are seeing here, these are what they call price quotes. So before now, people just use price quotes. They didn't have, before this was discovered, they just used this and join it with fundamentals, and that was what they used to trade back in the day. And you could see at some point some people, the westerners, the US and the rest of the world, other exchanges were using bar charts to do technical analysis. So you see the same data could be represented in different forms. I could represent it in a line chart. You might have done geography in school or statistics in school, yeah. So this is just the way you plot graph. This is what this technology is about. This is the price scale here. These are the prices of whatever asset this is you're looking at. And this here is what's happening lifetime in the market, right? So, but then us, we use Japanese candlesticks to do our analysis and it telling us our story. So now that you know, have an idea of what a candlestick is, how did candlestick come about is the next question you'll be asking. So the history of candlestick came about in the 18th century by this guy Munehisa Homma. Who is Munehisa Homma? Munehisa Homma was a rice farmer. Was a rice trader rather in Osaka, Japan, in the 18th century. So what made this came about was he saw a pattern in the market, that what moves the market basically is demand and supply at a basic level. We all know, you know it when you want something is demand, when someone wants to sell it to you is supply. So that's what moves the market. But then he quickly discovered that there were other factors that made market move beyond um, demand and supply, which consist of human emotions at a particular point, mainly greed and fear. Um, were factors that drive prices in the market, not necessarily just supply and demand. So then what did he do? He found a way to um, track, prices at different instances, their opening prices, their close, the highest they went, and the lowest they went for that particular session, right? So that's what candlestick is. It captures the opening price, the closing price, the highest event, the lowest event, and over and over and over and over again, like that. That's what it represents. So that was the whole idea about this charting thing, was just to capture data, and he did that over different seasons in the market, just so he could make more informed decision, because he quickly discovered that like patterns do repeat themselves. So that was the whole idea. But then this whole chart analysis technique was kind of like a secret, in away from the other world, except people who were in Asia, Osaka, Japan to be specific. But then along the line, in the 19th century, a guy called Steve Nison somehow on some expedition went to Japan, and that was how he was able to discover this. And he wrote a book after his research, after his study about how these guys read the market, and that was when this whole thing became popular to the Western world, and that was how everybody started using it. For you to have deeper understanding of what I'm saying, let me show you, let me recommend a book for you. You just come look at the name of the book, Japanese Charting Technique by Steve Nison. Go and download it. It will be very helpful to you. You would see it with yellow cover. So this was the book he wrote, and gave detail about everything you need to know about candlesticks. You see it, it's yellow, right? So let's check it out a bit. Let me help you guys. But then you could read the audio book if you don't have time. But then there are graphic representations that look at the book here, Japanese Candlestick Charting Technique, the second edition by Steve Nison. So you see everything you need to know there. I just thought to give you guys this expo, so it will help you go depth, you understand everything. But then the one, I can only do so much, I can't cover everything for you right here. So that's just a little context of how Japanese candlestick came in play in the first place, and how we use it. So how do we use it? Okay, that's the next question. So you see, these are data, like I said, of things happening in a particular session in the market, and they are being represented here for us in real time. And as we see each of these candlesticks, they tell you a story about what is happening. Remember, in all of this, you are doing that, you say you want to trade. You are everything you are doing, you are either looking for reasons to buy or for reasons to sell. Period. This is the whole thing about things. But then, what would you see that will make you want to buy or sell? From the story this data is telling you, once you get familiar and know how to read them, they will tell you a story. Because before price came to this level, there were people that bought from around these zones in anticipation for price to go up, and they did. So why did they buy from here is the whole story of it. We got different type of candlestick representation. You would see them more detail in that book, right? Individually, when you have the open, you have for a bullish candle. Let's pick a bullish candle. Let me set that example for you. For this bullish candle example, this bullish candle, look at the open, this place here. This place, this is the open. Look at the lowest. This week you are seeing, it represents that when market opened at this point, it came down. This was the highest, lowest point it came to in that day. We are in 4-hour session. In the period of that 4 hour, this whole same concept applies in whatever time frame. It doesn't matter, but just get the idea. So for a bullish candle, you see it opened at this point. This was the lowest it went. This was the highest price went, and this was where it closed. For this particular candle, it didn't even go low that much from where it opened and to where this was the highest point it reached. This was where it closed. For this particular candle that you are seeing here, yeah, look at where the candle opened. That's this one. Look at the lowest it reached. It went very high, but then it didn't close at that high. We close at this level. For this bearish candle you are seeing, it's open, it's the opposite. Since this one opens, the bullish opens from below, this guy opens from here, and this was the lowest it went, and this was the highest price came, and this was where it closed. So that was what the guy was trying to capture, because whenever it is price come at that level, that's when there's tendency for some repetition to happen. What do I mean? If you could see, there was some sort of bearish pressure, PS trying to take over here, but then the bulls were strong. But then now price came back, rode below this low, and the BS that were present here, you could see what's happening right here, this highlighted area. Price is around here again, and it's struggling just like the way you do. So question now, are the bulls gonna take charge like they did here or no? We don't know. But then that's what it means. The point of at the end of this video is for you to be able to read candlesticks on your own. Well, you won't be able to be honest, I ain't gonna lie to you. You're not gonna be able to read candles entirely from just this video, but then this will just prepare you forward to get you started, because it's a whole wide thing. Because even just looking at individual candlesticks, then you can start looking at single candlestick patterns, you start looking at double candlestick patterns, you start looking at triple candlestick patterns. Then is in these individual candles that now form chart patterns, where now you start having different type of chart patterns, where you see you have double bottom, double top, or it's wide, but then you don't need all you need there's a lot. So I recommend that book. I think I'm just gonna even put the link somewhere in the description to make it easy for you to just click and download for yourself, right? I'll put it in my Telegram group for the community to go there read and understand for themselves. You understand it better from the book because everything was put out. Like example, this is double candlestick pattern. Like this red candle that was here, and then this green candle that occurred here is telling you a story that something is happening, right? You could see with the first. Let me go to 1 hour so that you see at least 1 hour is fair. So let's start from this bottom, right? So everything happening, say, like at this point, and this guy taking over, it's telling, let me highlight it so you see from this point, what happened here. What happened here that made price reverse here? It didn't just happen. What happened here that made price, react like this? It's not just coincidence. Do you get what happened here at this level that all of a sudden price was wanting to come down, but then it found its way here also. Let me highlight here. What happened? Look at different instances of different happenings, right? What happened? What happened that all of a sudden price reached this level, and then we are seeing boom. So you see, this reading, you understanding how to read candlestick pattern is what will help you once you see some things like this guy, like this shooting star, evening star, morning star, like this guy here. You would have started anticipating some sales when you saw this guy alone, because it represents something. Each candle you see is telling you a story about what is happening in the market. This candlestick alone, so there are reversal patterns, there are continuation patterns, and there are neutral patterns, candle patterns. So it's a wide topic. This happening here, followed by this, But then one thing you should know that these candlestick patterns, it tells you more stories when they happen at certain zones, not just any zones, but certain zones. But that is something we would cover in the next video. But all I want you to know right now is example. Let me give you a few examples. So if when we are looking to sell, we are looking for bearish signals, and we are looking to buy, we are looking for bullish signals. So what are bullish signals? What are bearish signals? So example, the indication, once you see this example of thing happen, what it so therefore means is the bulls have taken over. It's kind of, the whole thing happening here is fight between the bears and the bulls. So whenever it is, how would you know when a bull take over? Then it will now give you indication to buy. And these same zones that would give you indication can also hurt you if you don't use them wisely. So example here, I want to highlight this. Let's start from the bottom. You see this indication here, this here, this look at this last red candle, and all of a sudden we have a bull, green candle cover it. This is a buy signal. What this means is telling you that the bulls have started kicking in, but they didn't kick in completely until here again. Look at that same pattern that you are seeing, like a gun. This is what they call the bullish engulfing candlestick. What it just signals to you that okay, in that particular session the bulls have taken charge, and then that is when you see most people start positioning for their buys, because market was moving and then all of a sudden you are seeing this. Look at this. In the whole of this season, you've not seen them, because the bulls were in charge at this point, you know, but then the BS took over. So example of the sell signal, look at another one here. The bulls were wanting to chase. So from just seeing this, I could interpret the story for you, right? So that's what candlesticks help you do. So the bulls were in charge here, but then the bears took over all of a sudden with this. So this is a bearish indication. So some people would have started selling, and you could see would have gotten some pips. And then when it was coming down, all of a sudden you see this guy. What is happening? And then it's not happening. It depends on the zone they happen, right? You don't just see them anywhere. Just example, you would have been hot if you bought here, right? Because a whole lot of other things go into that we mix together to, this is kind of like a final piece, but then before it, there are some other things. You have to look at the structure, you have to look at the timing, you have to consider your fundamentals, what is happening, all those things are what will gather up your confluence. Then this guy will just be they use it for confirmation. So example, let me show you. Let's look at this guy. What is this guy indicating to me? This particular thing that happened here. This was telling you that, like, here, like example, this candle that you are seeing with this long wave, but it's telling you his price wanted to come down, but then it got pushed up, right? It was wanting to come down. This candle got pushed up, like the bulls were still present, trying to like push the market up, but then somehow the BS took over, and then hence reason for this, right? So also this guy, look at another indication, look at another buy signal. So depending on the time frame you see them, it happens on 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour that we are right now, 4 hour daily. So it just depends on the time frame you're looking, but it's still the same thing, but just different fractals. So this here is a buy signal pending, because see that same guy, it took over, and then look at what happened next afterwards. After it, look at what happened immediately after it. This guy again, what are you seeing happening? We've not reached out patterns, but then see what's happening. Price came, wanted to go, it couldn't, it tested that level. Here it started indicating that the bulls had took over, but then came, took out, and then now this particular, he went on to even break this high. This is higher high, higher low, higher low, higher high. So you see, from this even happening, you would have started anticipating, your buys, right? Even from this level, this pattern here, it's an indication to buy your stop loss below, because when this happens, this becomes your resistance. This particular bottom of that guy hitting got is a resistance. What do you mean? See how price reacted when it reached to that zone. This same zone that was here, look at the reactions that has been, look at how much. That's to tell you this zone is a strong zone, because a whole lot of things happen. When price comes, it reverses. When price comes, it reverses at that zone, yeah. So look at when price use that as support. Look at the momentum. So do you understand? That's how we use this candlestick to read, and it tells us story about what's happening, and that's how we know who to side, whether to be on the side of the buyers or to be on the side of the sellers. Example of badly used indications. So some people might have sold off here with this, red and this. This is a sign of bearish takeover, but when they took over, it wasn't for long before, the bulls took over too. So today I'm just showing you the basic bullish and bearish engulfing. But then each of these single candles you are seeing, they have name. Like when you see this one, you see morning star or evening star. The ones that happen on top is evening star. It's a reversal signal when you read the book, right? So I recommend you read that book so you understand, because I'm going to be using some language. It's from that book, right? Bullish engulfing, morning star, shooting star, and what they mean. Example, look at evening star here. Either ways, we got the morning star, evening star, right? So the one below, above, is the, I don't know, either evening or morning. But then this, I want you to look at this guy, this single guy. Look at what was happening. Even you observing what's happening, you see that like price was at this was the resistance. Look at the engulfing candle that made for this short. Price engulf, you put here, you put your stop loss here, right, for example, and then you target. So that's it. That's how we find indications. So example, here is a resistance. So when you see an engulfing, right, the bottom of that thing that got engulfed alone is resistance. So that's why you tend to see many people, when they do like this, they put their stop losses. Some put it here, some put it, give it some space, because that's the resistance. So now look, after this drop, price still found this way back up there, but look at what happened in that same zone again. This same symbol I'm telling you that is the resistance, right? Look at what happened. Price came all the way you wanted to go. So look at where you would have using bullish engulfing badly, because if you would have bought and assumed that this was your resistance, you would have been hurt, because immediately the BS took over again. So if you were to be riding with this resistance, this would have been a sell signal for you. When this guy engulfed this guy here, that place was would have been a sell signal, a stop loss, some pips above it. You target the next low below it where it came, and you would have made all these profits, right? So I hope this is making sense to you guys and you're seeing, because everything you're seeing is telling you a story. So that was how it came about these sales, So things do happen. So this was what Munehisa Homma saw that made him came about this. Could you see? At this point on Tuesday, on Wednesday, 8th of July 2026, we had market drop from here, this particular zone. So that's their function. So what Munehisa Homma would do, he would have marked this one, and the probability of price still dropping when next it reaches this level, it's not that it's certain, but then remember I told you the reason he came about this whole thing was because he discovered patterns do repeat themselves. So this is a clear example of that thing I said. Why? Because this is entirely a different day on Wednesday. But then it came to Thursday, because each of these blue lines you are seeing in between represent that a particular day. What do I mean? Today is Tuesday. Look at the date here. You see something black over it. Today is Tuesday. On Wednesday, price reacted from this level. The whole of Saturday, on the whole of Wednesday, price was at this level. But then it so happened that on Thursday, market was going. It reached that level, and look at what happened again in that same level. So that was the point of the whole thing. And then markets coming again to that same zone, this same zone again after how many days? After like more than a week, price found its way back to that same zone again. Look at what happened around there. Can you see? So that's the whole thing about candlestick. You notice that price reactions do happen over time. Look at what happened there. Even though the buy pressure was much, it still found its way around that same zone, and look at what happened. So what are the tendencies again? That when price comes to that level, so what this means is even you are not going to sell here, you shouldn't be looking for buy opportunities around here because of this data that this market has given you, that anytime price is here, there's more likely to be sales than buy. So why would you see a bullish engulfing candlestick here? Could you see? So these are the places where when you use the bullish engulfing candlestick or any other confirmation wrongly, you'll be hot. What do I mean? Look at another bullish engulfing candlestick. You had every reason to sell because this is our buy signal, but then you would have lost your money. So that's why, because if you would have bought here and use this as your stop loss, maybe this low, say you want to target here, ignoring this zone, because why? You didn't even take note of what has happened in that zone. You just saw, if you had bought here, you would have lost money, right? But then if you would have been aware of this zone and marked it, these things happening here were already indications that the bears are taking over, and you would have taken a shot either from here or here, put here, a stop loss here, because this is the resistance, like I told you. So stop loss below it. Then it's good to put your stop loss above the previous high. And then if you would have targeted this low, you would have made good money. So do you see the idea of how traders see signals for buys or sells? So that's it. Remember, these candlestick patterns, they are relevant in zones that they matter. So bearish signals are going to matter more than bullish signal here, and still otherwise, where it clearly breaks, which it did, but you wait for a retest, then you buy if you must. Which look how it looked like what was happening. Came, he wanted to break, he couldn't, he went. So people would have been assuming that like it was coming for a retest, which it had already like started obeying if you look at it, but then the sellers were more present here, and that caused the market to drop. So that's how we use all these chart patterns to be able to make decisions in the market, right? So I won't go into the details of telling you one individual, like this is a shooting star, this is my confirmation candlestick. When I see this particular guy, you don't need to know all, just know the one that concerns you. When I see this guy anywhere, this is my sell signal. But this thing I'm saying is for advanced class, so you are the beginners level, the tights, right? I would have started selling here because why? I would have sold here and I would have been an early seller that would have been hot, because what this represents here is price was moving normally as it should, but then look at this pressure, it closed it down. This was where it started giving the signal that like there are sellers here, there are people selling here, right? So that's the thing. And then these guys, this was supposed to be a support, but then it failed. So what do you think will happen when price gets there? So sorry I'm using the word support. You don't know what that is, but then you know what support means. But now don't worry. Just worry about knowing these individual candlestick patterns and what they mean. An example here, look at the story that was forming. What is trying to tell you that since price came to this level, notice something. No price closed above 127. Anytime price comes, anytime it goes up the highest, it closes. It comes, it closes. It came, it closed. And then the bulls took over, and the BS took over rather. With this, you are saying, so it means in this battle, the BS were the one in charge, and look at what happened. If you would have followed them, you would have made good money here. So that's the typical story of what happened here. Ideally, he was supposed to just continue buying, but then he failed. So that's what tell you the sellers in the market were like active and strong and won that battle. So I hope with this little video it helps you, because I went as detailed as I could to give you basic understanding. So your homework after this session, watch the charts and identify bullish and bearish candles. So yeah, you do that. Go in your chart, identify the bullish and bearish candle, and I will see you on the next lesson.